Hi guys, welcome to Afternoon Tea with Dr. Wealth. So I am Chris and this is...
My name is Chris Ng and I'm the trainer for the Early Retirement Masterclass.
And I'm the trainer for cryptocurrency. So very interesting, Chris, that
Right.
I've been to this office twice.
Okay.
So even though it says Afternoon Tea with Dr. Wealth,
Okay, there is no tea, but there is a
both time
plant.
I'm here,
Yeah.
I've been fed beer and whiskey.
Okay. Okay. You probably
So-
expect me to munch on a plant, you know.
So today we want to answer some questions that we have for one another.
Okay.
I think we're
Alright.
going to kickstart with you.
Okay, so I'll begin. So Chris, what's the case to buy cryptocurrency for the person who's watching us right now?
Right.
Yeah.
Well, first of all, I just want to say that cryptocurrencies are inherently very volatile and they are risky. So you should only invest with money that you can afford to lose.
Okay, good.
And I cannot speak for all cryptocurrency investors out there, so I'll just speak for my own perspective. So I have a few theses in regards to crypto. The first is that there is a lot of money printing that's happening right now.
Okay.
Low interest rates, a lot of money printing.
All right.
And when I do a comparison of a lot of asset classes that are out there, whether it is stocks, bonds, property, cryptocurrency belongs to a new asset class and as such is really a lot smaller than all the other asset class. So my first thesis is that as money or liquidity floods the market, some of this liquidity will come into the control of people who like cryptocurrency.
Okay.
And some of that liquidity would then flow into cryptocurrency, and being a small asset class, my narrative around it
Okay.
is that it would expand or the price would grow at a faster pace
Okay.
compared to stocks and other mainstream assets out there.
Okay. Sounds reasonable.
I'll share one more.
Okay.
And I think that right now, millennials
Okay.
are going into their prime earning age,
Okay.
which means that millennials will have a lot more money to invest.
Okay, you're referring to Gen Z, because they're 40-year-old millennials.
I'm referring to millennials. I'm a millennial.
You're millennial.
Yeah.
Okay. Okay.
So a lot of my peers,
Uh-huh.
and actually even the younger millennials, right, they're
Right.
just starting out, they actually really like crypto. And
Okay.
I was just talking to someone else recently,
Okay.
and they, and she was just telling me that all her friends from university are all very excited and buying into crypto.
Okay.
So she is the younger millennial, so she's almost Gen Z,
Okay.
but she belongs to the batch that's just about to or just entered the workforce.
Okay.
So my second thesis then is that these guys, including me, they like crypto,
Okay.
and as such, some of these funds will flow there.
Okay. Okay.
Yeah.
Okay.
So
Alright.
is it my turn to ask?
Okay, your turn to ask.
Okay.
Alright. Okay.
So Chris,
Okay.
so recently, I mean, you are the REITs specialist, and as such, I would believe that interest rates affects REITs the
Alright.
most.
Yeah.
So I want to know what your outlook
Okay.
in terms of interest rates are.
All right. So for the students of my early retirement masterclass, we do a little bit of back testing over periods of time, where SIBOR is rising and where SIBOR is falling. All right. And when we perform these back tests for banks, we find that as interest rates go up, banks tend to do well. Interest rates tend to go down, then banks do not do well.
Make sense?
Right. So it makes sense that we should do a similar exercise for real estate investment trusts from the 2015 to 2019 period of time where interest rates were rising. Right. So when we back tested that, we find that even though interest rates were rising, REITs continue to outperform the STI during that period of time. So at least for the people who are part of my ERM program, the facts do not support the idea that when interest rates go up, the value of REITs were to go down. In fact, we find that, especially in the case of, for that time when office REITs are doing well, landlords were able to pass on interest rates increases to the tenant.
Okay, makes sense.
Now, that of course, we had only one data point and 1 point of history, but I think that we are cautiously optimistic that rising interest rates probably would not affect REITs as much as what I think other gurus or experts might say. Yeah, but we are obviously very, very careful when we build our portfolio. Yeah.
So do you think, at least for the next 1 to 2 years, do you think that interest rates will remain low?
I think interest rates will remain low until 2023, when Jeremy Powell said that they're going to raise interest rates approximately twice in 2023. So we are monitoring it very closely.
Right.
However, I think what we are going to see over the next 6 months is whether there is tapering. So right now the Fed is spending about $120 billion to actually purchase bonds, right? So like what you say, the case for crypto, there's a lot of money flowing in.
Yeah.
Maybe they will taper in that direction, maybe lower it to 90 billion.
Yeah.
Yeah, and then we will see what would happen, whether there's any taper tantrum. And what's interesting for me is that I want to see whether is there taper tantrum in the cryptocurrency space.
I think there will be.
Yeah, we don't know, but it's fun, right? Because we don't have any back tests.
We don't know, but
there is no signs, right?
But I think there will be. I think that there will be.
So I think that's fun. Yeah. Okay,
Right.
my turn, huh? All right, so what kind of asset allocation do you propose for someone who is starting out and building a cryptocurrency portfolio?
Okay, I think it depends on age.
Okay.
So if you are like 20 years old,
Okay.
like in your early 20s, I mean, how much savings do you have? I know that there are some university students who have saved a lot, who have 100,000 or more, but just generally, I think most people who start working, they don't have that much savings. So for the younger people, I would say you can go a little bit higher in terms of proportion to crypto. You can go 20, maybe 30%. Because if, for example, you have 20,000 in savings, you put in 30%, it is 6,000.
Okay, that's reasonable.
Come on, by 35, you're earning at least, I think on average, you should be getting like maybe 4,000.
35 years old.
I think.
Higher than that.
Okay,
35 years old PMAT.
I mean, on average Singaporean price,
Alright,
average Singaporean salary. So
Okay.
which means to say that even if you lose that 6,000,
Right.
you get it back within a month
Okay,
worth
okay.
of salary. So
Okay,
if you're
that's good.
younger, you can probably go higher. But if you're probably in your 40s, I would say to start out maybe 10% max.
Okay,
Yeah,
alright.
only money that you can afford to lose.
Okay.
Yeah, because people tend to go a little bit crazy when it comes to crypto.
Alright.
Yeah. Alright, second question.
All right.
So right now, we have a lot of people transiting, or I shouldn't say we have a lot. We
Okay.
do have people transiting towards a work from home hybrid model
Okay.
in Singapore. And what are your thoughts
Okay.
on how this will affect commercial REITs?
Okay, so I think to be more explicit, right, the impact is to a class of REITs called office REITs. That would be the
Okay.
largest impact. And the REIT that has basically 100% into offices would be Keppel REIT. All right, so lend some realism into our investment portfolios. So we really don't know what's going to happen for work from home. There is this train of thought that says that it's going to be permanent, and so the demand for offices is going to be permanently impaired. I think that there's some traction in it. But there is also another argument that says that Singapore is also attracting these tech companies from China, and they also need to build their head offices here, right?
Yeah.
And then the third thing that we need to be worried about is that there's this thing called BEPS, where the G20 countries have come together to set minimum taxes to 15%.
Okay.
And there is this fear that MNCs will leave Singapore. When you do that, basically it's an extinction event, right, for our office REITs. So I think we should be careful when we go into office REITs. The
Right.
yields are actually quite attractive compared to, for example, industrial REITs. All right, but I think for now, at least for my students are concerned, we are not putting a very high amount of allocation into office, right? We prefer industrial, okay? And in fact, I would even go and argue that even retail and hospitality might be safer, because this may be a strong recovery, right? Where we open up from COVID-19.
Yeah.
So
The malls
I
are crowded.
would tell people to be cautious for office REITs. Okay,
Fair
but we
enough.
will know very soon. We will know very soon. Yeah, we want to see how bosses behave, whether the bosses want their employees to come back to the offices. So right now, I think JP Morgan wants their workers to come back. Tim Cook of Apple wants their workers to come back, but we'll see how it goes. Yeah.
Okay,
Yeah.
interesting.
Yeah. Okay, my turn. Okay, let's see the next question. Okay, so within the cryptocurrency space, what currencies do you like and why?
Okay, so I would say I prefer categories
Okay.
within the crypto space. So if we talk about store of value or digital currency, purely digital currency, you of course have a Bitcoin, your Bitcoin Cash. If you're going to be looking at that, just buy Bitcoin lah.
Okay.
It just has the most traction, there's the most infrastructure. Everyone knows what a Bitcoin is compared to Bitcoin Cash or Bitcoin Gold or Bitcoin Dark or even Litecoin. If you have a choice, if I were to give you a Bitcoin or 10 Litecoin, which would you prefer?
Bitcoin, right?
You kind of just emotionally prefer Bitcoin,
Yeah.
and that traction and recognition and branding
All right.
kind of has an advantage. Now, in terms of categories, right, I think the favorite category for me is decentralized finance.
Okay, definitely.
Quite simply because I find it the most useful.
All right.
I find it way more useful than NFTs. I actually find it more useful than privacy coins. And I can imagine a market being built around it.
Okay.
Yeah, I can imagine people. You talked with a little bit as well, right?
Yeah. So I'm dabbling in crypto. Of course, I don't know what I'm doing, but I recently got into token sets.
Yeah.
I got into compound to actually compound, but the yields were really horrible.
Right.
I also have staked in synthetics, which I think I want to spend more time thinking about.
Yeah.
Yeah. But really, I really don't know what I'm talking about. And I think the rule for me when it comes to crypto is the opposite of what rational people would do. I do first, and then I learn how it works.
I think that's how I enter actually.
Yeah, because it's so complicated.
Yeah.
Right? It's so complicated.
You need to actually try it out and
Yeah.
experience it. Then you get to feel and see the value proposition.
Yeah.
I think one of the things about decentralized finance is, to my knowledge lah, and I am not really a very meticulous person, but to my knowledge, not every country and not every person in every country can purchase, for example, a US listed equity.
Right.
So synthetics or synthetics, however you pronounce it. So one of the value propositions that they have is that they create a synthetic share.
So you can synthetically buy Apple. You can synthetically buy a portfolio of FANG stocks.
Yes.
Yeah,
and that kind of just goes right on the line of legality.
Yeah.
And you're just treading on that thin line.
That's right.
So if it works out, it's huge.
Yeah.
If people get caught, then it goes to shit. So then for me, okay, so maybe one of the questions people ask is it a lottery ticket? So maybe this is the lottery that I'm thinking about.
Okay.
Like, I'm thinking a bet that they are going to be able to continue trading on that line, or eventually it gets accepted.
Okay.
Right. So that's how I go about it.
Okay.
Yeah.
For the more advanced investors who actually know what we're talking about with synthetics, I probably should voice some of my frustrations, because I got in thinking of getting some of the inverse synthetic counters. They're all frozen right now.
Okay.
They're all frozen. None of them are available for trade. So I can't short the DeFi coins if I wanted to.
I'm sure they'll sort it out soon.
Yeah.
There should be other options to short it though.
Okay, at least I'm really at the stage where I'm still learning, so I haven't found anything yet. Yeah. Okay, I think it's your turn to ask, right?
Oh, yeah. Okay.
Yeah.
Next question.
Okay,
I got this for you, right?
Okay.
So, for sure you invest in REITs. Now, do you do property investment directly? Like, do you invest in your own residential and rent it out?
Okay. All right, so before I start, right, I'd like to say that for the people who are listening to me, please own your first residential property, okay? It is your home. It is not a house to be traded, but you need a good home. Now, why do I say that? Your home could be staked, okay? Staked for millennials, right? With the CPF board, and then you're allowed to take more money out of your CPF at the age of 55, all right? So that's very, very important. And secondly, you really don't want to make your landlord wealthier. So I think when it comes to property, we should, as Singaporeans, we should own our first home.
Right.
Now, then the question then is, what about the second piece of property, right? And I'm not a big fan of the gurus that bombard me on YouTube every day, telling me to basically split my home into two.
Okay.
Right? And there's several very, very valid reasons, right? The first valid reason is that I have to pay property tax not as an owner-occupier, so I'll be paying higher property tax.
Yeah.
Right? Second thing is that when the rentals arrive, it flows into my personal income taxes. So I think it actually increases the amount of personal income tax that I have. The third reason is that I have to manage a tenant. Okay, and this is not a joke. I have students coming for the ERM program who are really wealthy, who should be conducting an investment course of their own. And I asked them, I said, why are you here? They say, oh, Chris, I want to liquidate one of my houses so that I don't have to deal with the tenants who are living in it.
Wow.
Right. Yeah. So
That
yeah, he
sucks.
says it's not funny when you have to wake up in the middle of the night, and the fella can be very unreasonable.
Understand?
Yeah. So yeah, but this is what I learned. I don't have multiple property though. So yeah. Yeah.
I think
Yeah.
the benefit of doing residential is, I think resi prices a little bit more stable, because it's not as liquid as well. Then the second thing is that you can do 4x leverage.
Yes. Yes, it's 4 to 1 because it's 80% loan, right? Yeah.
So the 4x
Correct.
leverage thing makes a big difference.
Yeah.
And if you really do buy one that appreciates in value, you can make your first pot of gold lah.
Yeah, very young.
I think like
Yeah.
HDB guys for sure. Private property I'm not sure. Now it's really expensive.
Right.
So yeah, anyway, another topic.
Yeah, because I know, right? Because I own my first home. My home is in EC.
Yeah.
Since I bought it, we bought it at around 860,000. It's now about 1.3. So
Sick.
I know what you
Yeah.
I know what you mean when you say that you're sitting on a pot of gold lah.
Yeah.
Yeah.
So I think that's the
Yeah.
big question lah.
Yeah.
Can it continue or not? And if let's say interest rates go up, will the private properties in Singapore be able to sustain this growth? That's a big question mark that I have.
I'm cautiously optimistic. Even though I'm not a big fan of owning your second home.
Yeah.
In terms of capital gains, I think the worst case scenario is that the prices remain stable. But generally speaking, once the international community knows how we are tackling COVID, right, we will be in a very good place because look at the number of GCPs that are being sold, right, recently. And it is a signal as to how much faith there is in our governance. So yeah, I think it's a good bet for it lah.
Yeah.
But of course, that being said, when you own a REIT, you're also owning some underlying property.
That's
right?
true.
That's also
Same exposure.
Yeah. So it makes, to me, it's not so much of a difference. It's just that my gearing is lower. That's all. Yeah. Okay, my turn. Okay, this is a good one. Some investors claim that cryptos can be staked for passive income. So maybe you elaborate on this. And maybe you can direct us to some of the more interesting exchanges where you can stake something with a higher APY. All right. Yeah.
So we can break it down into a few categories. We have getting interest from traders. So this is where you're going to an exchange, one of it, which let's say for example Bitfinex.
Okay,
You deposit Bitcoin, people borrow your Bitcoin, you lend it to them, and they do a leverage trade. They do 2x, 3x, 4x trades. They pay interest to you. So during periods of higher demand, you as a lender will get a higher interest, but it fluctuates.
Okay.
Then we have your lending platforms. So you have your tokenized exchange, which is a Singapore exchange. You can actually stake your Bitcoin there. So what they do is that they take that Bitcoin at the back lah, right? It's kind of like a fixed deposit. So when you do fixed deposit with the bank can use your money to do loans. Similar-ish to what exchanges do. They can do that, or they do a basis trade, and then they share some of the yield with you. Then the third categories are decentralized finance, and these are called yield farming, liquidity mining, where there are two methods to do it. One, you either stake it into a pool, right? So usually those are for adoption purposes. Protocols will get you guys to deposit with them. If it's a lending protocol, they can obviously lend it out, and then they will incentivize you by giving you some tokens. So they're saying, use the bank,
right?
And then as an early user, I reward you with some equity.
Yeah, including airdrop, right?
Yeah, airdrops.
Yeah, airdropping.
Right?
Yeah, that's right.
Then the other one is liquidity provision, and these are usually for the DEXs. So when we want to buy and sell crypto, what's really important in the space is liquidity. So the bigger the pool, the more amount I can exchange without causing a drop in prices. Exchanges want a huge pool, because when you have a huge pool, traders will come in and trade without suffering a lot of slippage in their prices. To attract you to put into the pool, they'll say, hey, put it in, and I will give you some tokens.
That's right.
And it's like a distribution of ownership,
Right.
Governance of the protocol. So as such, all these things that you get, these like tokens, you can sell it, and the equivalent will be considered yield for the capital that you stake and put in. Yeah.
Okay, cool. All right.
My turn.
Okay.
Okay, so this one is non-investment related.
Okay, all right.
Because I know that you like
Yeah.
FIRE, right?
Okay, I like FIRE a lot.
Maybe you can
Yeah,
introduce FIRE to everyone.
Okay,
What it
FIRE
is.
stands for Financial Independence and the Retire Early Movement. It is basically the basis of what I cover in my early retirement masterclass.
Yeah.
Right, which is actually a very customized version of FIRE for Singaporean audiences, right? So this is my rice bowl.
Right.
Yeah.
So tell me,
Yeah.
what is the best thing? You have fired, right?
Okay, the thing about FIRE is that I have reached the FI component, but
Okay.
because I'm a trainer with Dr. Wealth,
Yeah, still
I
kinda
cannot
working.
say that I've retired early. I've attempted to do that,
Right.
but it bored me to death. So
Right. But you have
yeah.
the option. you
I have that
choice.
option. I have that option. Yeah.
Right.
Yeah.
So what are
big-
some of the the
Yeah.
thing that you enjoy most about being financially free?
There are several things that I have spoken about. I could take my kids back from school,
Yeah.
and so when I do that, people give me funny looks. They think I'm a house husband. Otherwise, it's actually I develop a closer relationship with my son because my daughter, when she was schooling, I was working at the time. So that's a primary difference, right? When I'm raising my kid. The sadder story is that on my dad's final days in the hospital, I was visiting him every other day. So yeah, imagine trying to get leave in order to do that, right? So I think this forms a cornerstone as to why FIRE matters a lot to me. And of course, for the people who are single and their parents are relatively young, the immediate effect of FIRE is that you can decide how much sleep you have every day.
Travel the world.
Yeah. No. Okay, I need to.
Do TikTok videos.
Okay, so the thing is that the brand of FIRE that I like to tell students,
okay, yeah.
is that travel actually is overrated. The reason is
Okay.
because if you deconstruct why we travel, it's because you go to office every day, you get frustrated a lot. Your body produces a lot of cortisol, right? All these stress hormones.
Okay.
And you travel so that you can take a break, right? And so because of that, there is this entire industry on how to deal with people who are stressed. But if you are financially dependent or you're self-employed, you don't have a boss, one of the things you realize, and that's something that only FIRE people can tell non-FIRE people, is that travel becomes overrated. If you travel, you really want to understand the culture.
Right.
It's really something that you want to do over there. And so you
Right.
have to be more thoughtful about your travel choices. But for me, I don't belong to the group of gurus that like to tell you that, you shake leg and then you find yourself on a beach drinking margarita. How many sunsets can you watch, right?
Right,
Because
right,
if you
right,
FIRE,
right.
the truth is if you FIRE, you can be in Phuket for the entire year.
Yeah.
And it doesn't really add any value, right?
Yeah, I agree.
Yeah,
Well, I
so I'm
agree
a bit
on-
different
I agree
from
on
other people.
some aspect, but I
Yeah.
think some people
Yeah.
would disagree on the fact that
Yeah.
because they like to travel, they like to see the world.
Yeah.
It's a need in them to discover.
Okay, then
Right,
they can
so-
do that when they FI the first time.
Right.
But like all good things in life, right?
You get bored of
You
it.
get bored. They call this the
Yeah.
hedonic treadmill.
Yeah.
You get bored about it. After 1 year, you travel around the world. Then your real problems begin, right? What do you want to
Yeah.
do for the rest of your life?
I have to say I
Yeah.
agree.
Yeah.
I think the thing that I kind of really like right now,
Yeah.
knowing that financially I have some quite a big reserve and I feel quite safe about it. So the things I like about it actually is that I get to play basketball.
Okay, that's good.
Right,
That's
so 5 o'clock,
Yeah.
I can go play basketball with like kids way younger than me, but
Okay.
I'm the only guy in my 30s who have the time to go there every day
Okay.
to play, take care of my son,
Okay.
play with him. But actually, at the start, right, after a while, it feels a little bit disorientating and a little bit boring, and actually can get a bit isolating because all your friends are working. Then when you tell them and you ask them what you're doing, or when you show them pictures, it's almost as though they can't relate as well because they are in the office and they might not like to receive such like pictures of you relaxing.
Actually, to be fair, there is a lot of hostility against people who are financially dependent. First of all, ordinary people don't understand. So I've had people think that I'm a house husband, which is really horrible because I pay for my mortgage, I sustain my family. My wife doesn't even work. So, So I think that's the first thing that upsets me, but I've gotten used to it now. Then the second thing is for the people that really understand what you're doing it. there is a certain number of friends who think that you've cheated. You've cheated through life, right? You've cheated because you've
You got lucky.
so some people would accuse you of coming from a more well-to-do family, which I can't change because
Okay.
my dad
Yeah.
is the founder of Pet Lover Center. I mean, I'm happy to say that. I'm very proud to say
Are you
that.
also one of the?
No. It was my
Okay.
dad had a falling out with his brother.
I see.
And he didn't build up the business.
I see. Okay.
Right, so I cannot go out and claim that I'm a rags to riches story. You know.
Sure.
One day my family don't have enough electricity, and then another day, wow, I'm a guru teaching you how to retire early. It
Yeah.
didn't work that way. I really had a middle class upbringing, right?
Okay.
And I can't do anything to change that.
Right.
Yeah, yeah. So I think that's something that you need to live with, and the
Yeah.
people who think that you've cheated would think that but you've cheated because you've found a way to become a landlord, and you found a way to leverage along the way, which is practically what we do with REITs. I had a law university professor who called it tax arbitrage, right? Very sophisticated way of saying that I've cheated.
But
Because
everybody can do
he
it.
grew up playing Dungeons and Dragons with me, and he's my professor.
Right.
And I'm his student, but he's
still
working his
working.
ass off. I'm just attending his lectures and doing his tutorials. So yeah, so
Tax arbitrage.
yeah, so I can't really help that. I notice people in the legal industry are particularly salty, who think that I didn't earn it because I landlorded my way through. But I want to remind everybody that my family started out owning a pet shop, and all we did was pay rent to the landlord.
Yeah.
And when I was growing up, my parents would fight. They would fight because they couldn't pay that rent.
Yeah.
So imagine what it's like growing up as a kid. I grew up with this desire to basically become a landlord. So that's what drives me. And
I can relate to that,
Yeah,
yeah.
and I don't care if people say that we're cheating. I mean, tell me what API you're getting for some of your staking results.
So the lowest usually that go for be 20%.
20%, right?
Yeah.
Yeah. Is that cheating? It's not, because you have to
It's not.
study. You have to study how the staking thing works.
Everyone
right?
can study it.
Everyone can study.
The
it, right?
information is right there.
Exactly. Right.
Yeah.
So if you go in earlier, right, and you do this liquidity staking thing, you are in fact landlord to the power of 2. Landlord to the power
But
of
I
3.
took the risk, right?
Yeah, you took
it
the
could
risk.
have gone to shit.
Yeah.
Yeah.
It could be a rug pull, right?
Yeah.
Yeah. Some could pull the
So,
rug. Right. Yeah.
so I take the risk,
Yeah.
and when it doesn't, I took the effort to study it,
Yeah.
to try and avoid the riskier ones, and that takes energy, that takes maybe a certain level of expertise, right?
Expertise,
Experience.
there's a lot of
so
it, yeah.
all this has been gathered over the past years.
Right.
Then it brings me to where we are today,
Yeah.
and that's how we are able to pick. So I don't think it's cheating. I mean, I like the word arbitrage, but
Yeah.
it's also kind of there for everyone, right? Yeah,
Yeah.
your lawyer friend could have done it.
Yeah.
Anyone could have done it.
I mean, we chose to study
Yeah.
decentralized finance. Other people chose to queue up for the BTS McDonald's meal. At the end of the day, if we do better than you, how is it our fault?
They did earn though for the BTS meal.
Yeah, you did.
Yeah,
They
it was like
sold
a-
it for like $800.
Yeah.
Right?
So
Yeah,
actually,
it's horrible.
their return on capital is higher than us.
Yeah, maybe you should start a boy band with all the Dr. Elf trainers. Like,
Oh,
yeah.
I'm sure I would love to see Alvin dance and sing.
Yeah. Okay. I ask you the last question, right? This is my last question,
Right.
because you've answered 2 questions at once. All right. Now, do you play cryptocurrency derivatives? All right. Is there any particular strategy that you particularly like?
Yeah,
Yeah.
so I used to before decentralized finance came about, before I can get that 20% or higher return,
Right.
I use options.
Okay.
So I played with options quite a lot. You get about 1 to 1.5% per month in
Okay.
premiums, and that works for me because I'm a long-term holder of Bitcoin. So basically, what I do is I hold Bitcoin,
Okay.
and I sell a call.
Okay. Oh, you sell a call option. Wow.
But I have Bitcoin.
Okay.
So
you have
I
Bitcoin.
just sell the call amount that is equivalent to Bitcoin,
Right.
and I just do a markup, 20%.
Okay, so this is what we call a covered call strategy.
Yes, cover call.
Using Bitcoin.
Yeah.
Right. And what is the implied R? There's this implied return R when you perform.
Yeah, I don't
A cover call.
remember,
Okay.
but on average, I get about 1 to 1.5%. So if I
Okay,
do it
that's good.
on 100 Bitcoin,
Okay.
I get about 1.5 Bitcoin a month.
Okay. And what is the duration of this call option?
1 month.
Ah, that's very good. So it's 1.5. So okay, 0.015 to the power of 1.015 to the power of 12. So that's That's around what you do. That's a very good
It's
yield.
very good. Yeah.
Yeah,
I think it has
at least,
compressed now.
Yeah, it's at least 18% the yield. Yeah, when you do that.
That was in 2019
Okay.
and early 2020s. I'm not sure what the premiums are now, but it tends to compress
Okay.
when volatility is low. So
Okay.
now Bitcoin shot up and go down.
Okay.
Volatility has decreased.
Oh, that's good. So it's
Yeah.
actually
So you actually get less premium. It's not as good for me if I'm selling, but I'm not
okay.
selling. Yeah.
All right. Okay, but you also means that you can buy options on the cheap when the volatility drops. Yeah.
You can, but because
you
I
get a
don't
call,
do
right?
it.
You
Yeah,
get a
but
call,
those
right?
people who
Yeah.
do it is good for them because
Okay.
they can get it cheap now.
Okay.
Yeah.
Right. Thank you very much for listening to us. It's Chris Long, the cryptocurrency trainer for Dr. Wealth, and it's me, Chris Ng. I teach the Early Retirement Masterclass.
Yeah. Thanks for tuning in. I hope you learned something today.
All right. Goodbye. All right.